After finishing your writing, please text me in the chat box. Here, the share reserves and surplus is given, but net profit before tax is not given here. So you need to calculate the net profit before tax. Okay, we will start to solve now. Don't worry, those who have not written the question, you can see this. Okay, in this question, two ledger entries we have to make, because in this one non-current, in the adjustment they are given new machinery was purchased for 50,000 during the year. So we have to make an entry of this, and then non-current investment costing 25,000 were sold at a loss of 3,000 during the year. So we have to make a ledger entry for these two adjustment. Okay. First, we need to calculate the net profit before tax. How much is the amount? Here, profit and loss balance on 31st March 2012 is how much? 66,000. Then what all things we have to do? We have to deduct the profit and loss balance on 2011, means previous year. How much is the amount? That is 74,000. Okay, if we deduct, how much we will get? Minus 8,000 rupees. Then we have to add the transfer to general reserve. How much that is? Transfer to reserves and surplus is given. That is 1,40,000 minus 1 lakh means 40,000. Okay, then do we have any kind of provisions of these things? We don't have, so we'll end up here 8,000 minus 8,000 plus 40,000. We'll get 32,000 as net profit before tax. Yes, we got this one, and we will do the calculation here. Net profit before tax is 32,000. Then what all things we have to do? Adjustment for non-cash and non-operating items. That is, we have to write the add. What we have to add is depreciation first. But here the question arises, do we know the depreciation amount? We don't know the depreciation. So we'll calculate the depreciation here. We will write the fixed asset account. We'll do the ledger entry. First is in the asset account, we have to do asset account. The balance brought down. How much? Balance brought down is 1,75,000. First opening balance. Then what all things we have? We have closing balance. So we'll write in the right hand side. By balance carried on. How much is that? 1,75,000, 2,10,000. Anything else it has given? Yes, in the adjustment, what all new purchase is given. So I'll write here new purchase means to bank account. Because while purchasing an asset, we have to write the journal entry, machinery account debtor to bank account. So how much is that? 50,000. Anything else we have? We don't have, because in this fixed exout account we are ascertaining the depreciation of current years. So here the balancing amount is the depreciation. How much is the balancing amount? We'll write here 2,50,000 minus this total amount, or else by balance carried on. $15,000 is the balancing amount. This is the depreciation. Yeah. Then we'll write here 15,000. Again, what all things we have in the adjustment for non-cash and the non-operating? We have made a loss while selling the non-current investment. Okay, because in the adjustment it has written that non-current investment costing 25,000 were sold at loss of 3,000 during the year. We will make the non-current investment account, but now we don't want. So we will write that loss on sale of adjustment investment. How much? 3,000. Then what all things we have? In the long-term borrowings, we have 10% public deposits. So we have to give the interest to them for 1 year. So we have to write interest paid 10% of 50,000. Okay, anything else is there? Yes. Then we need to write the operating profit before working capital changes. How much is this? 32,000 plus this. $55,000. Then add increasing current liabilities and decreasing current asset. In the asset side, what all things we have? In the asset side, we don't have increasing item. All the things are increasing only. So in the liability side, we have sundry creditors. First is how much this is increasing. Yeah, increasing in current liabilities. 38 and 25. From 28,000 to 35,000, it is increasing. How much? 7,000 rupees it is increasing. Sundry creditors, 7,000 rupees. Then what all increasing is there? Bills payable, it is decreasing, so we cannot write. Then we have to deduct. Add items is over. We'll deduct now. First is inventory. In inventory, it is increasing current assets. So how much it is increasing? From 2 lakh 80 to 3 lakh to 280, 280 to 3 lakh 20,000 rupees. For the public deposit, we have another one. So I have not written here. So I have leave that 2 rows. I will explain you in the later part. Then increasing inventory. Then is trade receivables. It is also increasing. How much it is increasing? Increasing by 92,000. Yeah, 92,000. Then what all things we have in the liability side? We have bills payable, and creditors we have taken. We have bills payable. It is decreasing from 14,000 to 18,000. How much is this? 6,000 rupees. Okay, now we have total amount is it is minus 56,000. I will write down here. What is this 1,11,000? This is net cash used, net cash from operating activities. Then we have cash flows from investing activities. What all things we have? We have the asset we are purchasing. How much? We are purchasing 50,000 rupees. It is given in adjustment. Or you can see this ledger account. You can come to know we have purchased the machine. Then we'll come to non-current investment. So we have to make a entry for this non-current investment. And this is also an asset. So we'll start with balance brought down. Opening balance. How much? 25,000. Then we have the closing balance. How much? 40,000 rupees. Okay. Then in between in the adjustment, it has given that the investment has been sold. Let me see the current non-current investment costing 25,000 were sold at a loss of 3,000 rupees. Then we have made a sell. How much? 25 minus 3,000 is 22,000. Then what all things we have? We have to write the sale and loss entry. 3,000. Okay, then anything else we have? This much only. So I think in the right hand side it is more value comparing to the left hand side. We'll do this. 65,000. And the difference amount what we have to write is to bank account here, because here we will write the sale amount. So here we have to write the purchase. We think that if the balancing amount comes in the left hand side, we have to think that we have made a purchase. So to bank account, how much? 25 minus 65 minus 25,000. That is 40,000. This we have to write as balancing figure. How much we have made the purchase? 40,000. Then sale of that investment only we have to write here. While selling, we got 22,000. Then what all things we have? We'll find out here. In that question, they have given non-current investment at 12% per annum. So we are getting the interest here. Interest on investment. How much? That is while we have calculated, we got 3,000 rupees. Then anything we have? This much only. Net cash from financing, investing activities. Net cash flow. Then we have to last is cash flow from financing activities. What all cash flows is there? In the liabilities, share capital is there. From 3,80,000 to 4,50,000 we have made. So we have made 70,000 issue. So we'll write issue of share capital. Then interest paid to public deposit. We have to write. How much we have paid the interest, because already we have calculated here. We have paid 5,000 rupees interest paid. Because in this interest item, we have to make we have to write it two times, because interest is an non-current non-operating item, so we have to write down here, and here in the cash flow we have to write down the interest we have paid. Then what all things we have in the CC account, in the cash credit account, this also it has increased by 30,000. Then what all things we have? Yeah, interest paid to public deposit we have written, and increase in cash credit we have written, and one more thing is public deposit, long-term borrowings, public deposit we have to make the calculation. So here in the public deposit, we have to assume that new public deposit amount 25,000 have been accepted at the end of year 2012. Okay, I will write down here. We have to assume that new public deposit amounting to 25,000 have been accepted at the end of accounting year. So we have to write here receipts on public deposit. Receipts from 25,000. Then what all things? That much only. And here in the cash from operating activities, there we have to write down the interest on non-current investment. So we have received the interest at 25,000. So we have to give back to the interest amount. So interest to investment. I will write down here. 1,20,000. This is net cash flow from financing activities. Then we have to write net increase or decrease in cash. First we will calculate minus 59,000 minus 65,000 and 1,20,000. So we are getting negative 4,000 rupees. So it is decreasing. Then we have to add the cash at the beginning of the period. How much we have at the beginning? We have 34,000. Then 34 minus 4,000 is 30,000. Cash at end. Yeah, those who have doubt, please ask me. So there is no loss on fixed assets because in the entry we have made in the fixed asset account, we don't have any loss entry. Okay. And in the adjustment also, we don't have entry regarding the fixed assets. Yeah. Interest on investment. So in this interest on investment, I will explain you that one. So it has been assumed that investment has been sold and purchased at the end of the accounting year. Here in this one, we have calculated. So we are keeping in that mind. So we are doing that on 25,000. We have to pay 12% on the interest. 12% interest we have paid. So we have to we have written minus 3,000 rupees. And in the public deposit, see, public deposit, what it has told is 10%, 10% public deposit. Okay. So one thing. And in the first, in the previous year, 50,000 is the amount, 10 public deposit. So for this 50,000 rupees, we have to pay interest to that public deposit. Okay, so we have written here interest paid to the public deposit 10% on 50,000 rupees. And in the in the financing activities, I have written also receipts from public deposit 25,000 rupees here, and then interest paid to public deposit 5,000 rupees, because in the previous year we have paid how much? For the 50,000 rupees we have paid 5,000 as a deposit, public interest on public deposit. Then in the 70 in that last year also we have to make the entry for the 50,000 only. Yeah, here we have receipt, because in the next year we have to pay the interest. In the first year we got, so we have to pay it, and then also we have to write down in the financing activities also we have paid the 5,000 rupees. So two times you have to write the interest paid. Because interest paid is an non-operating item, no? So we have to write that one. And in the financing activities, while we are this cash is going out, so we have to write the entry, interest paid to public debt. Okay. Remember that interest paid we have to write two times. In that operating activities, we have to write interest paid as a positive, but in the financing activities, as we are giving cash is going out, so we have to write down the negative point, means negative 5,000 rupees. Okay.